$15 billion. That's the value of the oil pipeline that just blew up in the Baltic Sea. And you won't believe what caused it. It wasn't a multi-million-dollar missile. It wasn't a naval operation with submarines and destroyers. It was a swarm of drones that altogether cost less than a used Ferrari. While you were asleep, one of Russia's most strategic ports turned into hell. Massive oil tankers, each carrying millions of dollars worth of crude, went up in flames like matchboxes. The so-called Shadow Fleet, that billion-dollar ghost ship scheme that dodged all international sanctions, literally turned to ashes on the water. But here's what no one's telling you. This wasn't luck. It was pure math. Spending $5 million to destroy $500 million. And it's happened 61 times, 61, in the last 20 months. Today I'm going to show you the real numbers dismantling a petroleum superpower, billion by billion. And when you see the math, you'll realize this isn't just a story about drones or oil. It's about how to take down a giant using the most powerful weapon there is, hitting him where it hurts, in the pocket. Stick around to the end, because what comes next will completely change how you see this conflict. Before we dive into the technical and financial details, you need to understand the big picture. Since January 2024, Ukraine has launched at least 61 drone attacks on Russian oil refineries. We're not talking about isolated or random operations here. This is a systematic, coordinated campaign targeting the heart of Russia's economy, oil. The most recent and spectacular target was the port of Primorsk on the Baltic Sea, attacked in September. But that's just one chapter in a much bigger story. The Ukrainian strategy has turned cheap drones into devastating economic weapons, and the numbers prove it's working. Russian oil and gas revenues dropped more than 20% in 2025 compared to the previous year. We're talking billions of dollars that simply stopped flowing into Moscow's coffers. According to data from the Center for Research on Energy and Clean Air, Ukraine carried out 61 coordinated attacks on Russian refineries between January 2024 and September 2025. That's an average of 3 attacks a month, all designed to cause maximum economic impact with minimal resources. The Kyiv refinery, near St. Petersburg, is a perfect example of this strategy. The facility processes 17.7 million metric tons of oil per year, about 355,000 barrels per day. It's one of Russia's most modern refineries, fitted with top-tier tech. But that didn't stop it from being hit at least 4 times. In March 2024, then again in March and September 2025, and most recently in October 2025. The September attack was particularly devastating. One of its main processing units was destroyed, instantly wiping out nearly half the refinery's production capacity. To put that into perspective, imagine half of all the fuel produced in that entire region suddenly gone overnight. But the campaign didn't stop at Kyiv. The Orsk-Nefteyorgsinsk refinery in the Orenburg region was also targeted in October. Chemical facilities in the Perm area were hit in the same operation. The pattern is clear. Hit multiple targets simultaneously to stretch defenses thin and maximize economic damage. What makes this strategy even more impressive is the precision. These aren't random strikes. Each drone was programmed to hit specific points: atmospheric distillation units, pumping systems, storage tanks, and loading terminals. These are the choke points of production, where even small damage triggers massive ripple effects. Now, let's focus on the attack. That really caught the world's attention: Primorsk. This port on the Baltic Sea isn't just another oil terminal. It's one of Russia's main export arteries, handling hundreds of thousands of barrels per day for international markets. Primorsk works like a strategic hub. Aframax-type tankers, those giants capable of carrying up to 120,000 tons of crude oil, line up to load at this terminal. And it was precisely this flow that Ukraine decided to interrupt. The operation took place in mid-September. Swarms of long-range drones crossed hundreds of kilometers toward the target. And here's the fascinating technical detail. It wasn't just a few explosive drones. It was a coordinated saturation strike. Hundreds of unmanned aerial platforms were launched simultaneously. Many of them were decoys, cheap drones with no explosives, programmed only to appear on radar and confuse the defense systems. While Russian anti-air systems tried to shoot down all those fake threats, the real drones, the ones carrying warheads, followed alternate routes and hit their targets with surgical precision. The targets were chosen to cause maximum paralysis with minimum resources. The main pumping station was destroyed. Collectors that route oil from pipelines to ships were damaged, and 2 Aframax tankers being loaded at that moment caught fire. The result was immediate and dramatic. Massive fires engulfed the port. Loading operations were completely suspended. And most importantly, that corridor that moved billions of dollars a year simply stopped working. To gauge the financial impact, when a port that exports 200,000 barrels per day goes offline, and each barrel was worth around $75 at the time, we're talking about a $15 million loss per day. Every day of downtime means more money that doesn't make it into Russia's coffers. Now, I need to explain one of the most ingenious and controversial schemes in this whole story, the shadow fleet. When Western sanctions started tightening, Russia had to find creative ways to keep exporting its oil. And the solution was brilliant, though completely illegal. The shadow fleet is made up of hundreds of old oil tankers, many over 20 years old, bought by shell companies registered in tax havens. These ships operate without Western insurance, switch off their transponders to avoid tracking, and often change their flags to stay unidentifiable. In January 2025, the U.S. Treasury Department identified and sanctioned 183 of these ships at once. The European Union went even further, sanctioning 415 vessels. But here's the catch. Even with all these sanctions, the shadow fleet keeps operating because there are always buyers willing to look the other way. And it was precisely this fleet that was active in Primorsk when the Ukrainian drones struck. The ships that caught fire were part of that scheme. Uninsured, poorly maintained vessels carrying oil above the price cap set by sanctions. Recent investigations by Politico revealed that at least 5 ships from the shadow fleet caused oil spills in European waters in the past year. They're old, poorly maintained, operating in unsafe conditions because the only goal is fast profit and sanctions evasion. The business model is simple but effective. Buy discounted Russian oil, move it on ships that don't appear on official radars, and sell it to buyers who don't ask too many questions. China and India are the main destinations, but there's a complex web of intermediaries involved. When the drones hit Primorsk, they didn't just strike physical infrastructure. They hit an entire business model. Ships from the shadow fleet that once operated with relative impunity now have to consider they could be caught in the crossfire, literally. Now let's get to the part that really hurts Moscow's wallet, the real financial numbers. And we're not talking vague estimates. These are concrete figures released by Russia's own Ministry of Finance. In the first 9 months of 2025, Russia's oil and gas revenues dropped more than 20% compared to the same period in 2024. In absolute terms, that's a fall of 6.61 trillion rubles. Converted to dollars, we're talking about roughly $65 billion less flowing into government coffers. And that drop isn't just because of lower international prices. It's a direct result of the Ukrainian drone campaign combined with increasingly effective sanctions. Let's break these numbers down so you can see the real impact. In August 2025, only 53% of Russian oil shipments used vessels insured and serviced by G7 countries. The other 47% relied on the shadow fleet. And a quarter of those shadow fleet shipments were made using already sanctioned ships, meaning they were operating completely outside the law. Russia's budget deficit reached 3.7 trillion rubles in just the first half of 2025. That's $46.25 billion in the red. To cover that gap, the Russian government is burning through its international reserves and diverting other funds into military spending. Analysts at the Atlantic Council estimate that Ukrainian attacks have temporarily eliminated around 10% of Russia's total refining capacity at certain points. It's not permanent destruction. Refineries eventually get repaired. But every day of downtime adds up to losses. Let's take a concrete example. When the Kyiv refinery lost half of its production capacity, that meant 177,000 fewer barrels being processed daily. If the shutdown lasted 30 days before full repair, that's 5.31 million barrels lost. At $75 per barrel, that's $398 million in lost revenue from just one refinery in a single month. And here's the key point. Ukraine's cost to carry out these attacks is a tiny fraction of the damage inflicted. A long-range Ukrainian drone costs between $20,000 and $50,000. Even if they use 100 drones in one operation, the total cost would be $5 million to cause hundreds of millions in damage. The math just doesn't work in Russia's favor. Obviously, Moscow isn't just sitting there watching its money go up in smoke. Russia's response is happening on 3 simultaneous fronts: military, logistical, and diplomatic. On the military front, Russia has drastically ramped up air defenses around key oil facilities. Panzer and Tor systems have been redeployed to protect refineries. Electronic warfare batteries have been installed to jam drone control signals, and air patrols have intensified along probable approach routes. But here's the problem. Defending hundreds of facilities spread across thousands of kilometers is simply impossible. It's the eternal attacker versus defender dilemma. The attacker only needs to find one weak spot. The defender has to protect every spot all the time. On the logistics front, Russia's response has been rerouting. When Primorsk was hit, shipments were diverted to other ports on the Black Sea and the Pacific. Alternative pipelines were activated to offset bottlenecks. And ironically, Russia increased imports of refined products to supply its own domestic market. Bloomberg data shows that while Russia's refining capacity has dropped, its exports of unrefined crude have gone up. In other words, Russia is selling more raw oil and buying more refined gasoline and diesel. It's less profitable since the value added from refining goes elsewhere, but keeps the cash flow going. On the diplomatic and legal front, Russia is pushing for international investigations into the attacks, claiming civilian infrastructure is being targeted. At the same time, it's deepening cooperation with countries like Iran and China to develop alternative trade routes and payment systems that bypass the Western financial network entirely. But none of these responses solve the core problem. Every successful strike costs millions in damage, millions more in repairs, and takes billions out of circulation while the facility is down. Here's one of the weirdest ironies in all this. Russia, one of the world's biggest oil exporters, has been forced to import refined fuels in growing volumes. Why? Because attacking refineries doesn't destroy the crude oil. It's still being pumped out of the wells. But without enough refining capacity, that crude can't be turned into the gasoline, diesel, and jet fuel the Russian domestic market needs. So the solution has been to sell the crude, which is less valuable, and buy refined products, which are more expensive, from countries like India, China, and even partners in the Middle East. It's economically inefficient, eats away at profit margins, and drains the country's foreign reserves. Analysts from the Center for Research on Energy and Clean Air have found that this dynamic is creating an interesting effect in global markets. Countries buying cheap Russian crude are now profiting by selling refined products back to Russia at a markup. For ordinary Russian consumers, that means higher prices at the pump and potential shortages in remote regions. For the Russian government, it means more fiscal pressure and fewer resources for other priorities. And there's an even bigger hidden cost: infrastructure maintenance. When refineries are hit repeatedly, the temptation is to make quick, temporary repairs instead of full rebuilds. That cuts efficiency, increases accident risks, and creates a vicious cycle of deterioration. You might be thinking, okay, Russia's losing money, but how does that affect me? The answer: more than you think. First, price volatility. Every time a major refinery is hit, oil markets react. Traders adjust contracts, insurers raise premiums, and buyers look for alternative sources. That uncertainty translates into higher and less predictable prices at the pump. Second, trade route reshuffling. Countries that depended on cheap Russian oil, especially in Asia, now have to diversify suppliers. That's boosting Middle Eastern producers and increasing interest in alternatives like Kazakh oil flowing through the Caspian. Third, pressure on the shadow fleet is creating environmental risks. Old, poorly maintained ships operating without proper oversight have already caused multiple spills in European waters. The risk of a major environmental disaster grows every month. And finally, there's the geopolitical dimension. Less oil revenue means fewer resources for Moscow to sustain its military operations and international commitments. Allied countries that rely on Russian support are feeling the squeeze. Defense contracts are being reconsidered, and economic agreements are being renegotiated. For consumers in oil-importing economies, including Brazil and other Latin American countries, the effect is indirect but real. More uncertainty in global energy markets means more price volatility at home and greater difficulty in long-term economic planning. So let's recap what we've seen here. 61 coordinated attacks, billions of dollars in damage, Russian oil revenues down more than 20%, and all of this carried out with drones that cost less than a luxury car. We're witnessing in real time the transformation of economic logistics into the main battlefield. It's not about head-on clashes between armies. It's about squeezing economic pressure points until the adversary can't sustain operations anymore. The shadow fleet, that billion-dollar scheme that once looked untouchable, is literally going up in flames. Refineries that should be protected by multiple layers of defense are being hit again and again. And the numbers show the strategy is working. For Russia, every attack means tough choices, spending scarce resources on defenses, rerouting shipments through longer, costlier routes, importing products it used to export, and explaining to the public why there's less money for public services while military spending keeps rising. For the rest of the world, it's a clear sign that modern conflicts aren't just about military supremacy. They're about economic endurance, logistical resilience, and the ability to adapt faster than your opponent. And here's the most important lesson. Asymmetry works. When one side can inflict disproportionately higher damage than the cost of its operations, basic math guarantees the other side will eventually start recalculating its options. The next few months will show whether this economic pressure is sustainable, or if Russia can adapt its defenses and operations fast enough to minimize the damage. But one thing's for sure, we're far from the end of this story. If you've made it this far, thanks for watching. Hit the like button, subscribe to the channel, and turn on notifications so you don't miss the next updates. And tell me in the comments, do you think strategic attacks on economic infrastructure are legitimate tactics in this kind of conflict? Let's talk about it, and I'll bring more analyses as new developments unfold.